basis. We have also seen, like, since we are not there in the prime home loan and the new car loan and the gold loan, but we are seeing, like, every month the disbursement happening at a higher level. So I think the current quarter should be much better than what we have seen in the past. But I think this is a continued path where the trend is absolutely improved, continuous improvement path. So we'll see I think much better on this. On your CASA, I think I would just like to make one point. Today, if you see our overall deposit growth and the deposit growth on the CASA, okay, is doing much better than what the industry is doing, especially when I talk about the retail. So I think if you need to grow on the overall liability side at a rate, okay, which would be higher than the industry, then it means for improving the CASA ratio further, you need to grow on CASA much higher than the overall deposit growth, which in the current times, if we see the trend across the industry, we seem like it's a tough thing. But I think the important part is that we have taken actions in terms of reducing our rate of interest on saving bank, where the cost of saving bank has come down by almost 150 basis points, and despite this we are improving. So I think it would be like a balanced approach where we would continue to have the rate action and have the growth also.
Sorry, go ahead, sorry. Apologies.
No, Jayant, please go ahead. Please go ahead with the question.
If I may squeeze in one more question. If the third quarter disbursements do improve, the way you are hinting at, should we now think of next year growth closer to the mid-teen number, or how should we think about next year's growth?
So absolutely, Jen, like if we see in terms of the growth for the current quarter, sequential growth, which is 2.9%, okay, we are very confident that we would be able to grow more than 3% in the current quarter, which will take our credit growth to around 8%. Okay. But definitely next year, after I think able to solve the issues in terms of better underwriting and better risk policies control on the retail, and also in terms of like all the I would be saying the high-risk corporate loans have already been repaid. I think we would be definitely targeting a loan growth which would be more or less in line with the market, barring, I think, if we need to exclude the growth, especially on the products like prime home loan and the car loan.
Very, very helpful. Thank you, sir, and all the best.
Jayant, hi, Niranjan here. I just wanted to maybe add to what Prashant said on the CASA. So I just wanted to say that, look, we did call out that in September, sometimes there are certain transient flows that kind of go in on the deposit side, especially on the current account side. And therefore, if I just bring your attention to the average performances here, both on current account and savings account at the full bank level, we have seen almost like a 8% increase in current account YOY and about 17% in savings account YOY. If I bring that attention more to sequential numbers, both CA and SA has grown by 5% each. So yes, sometimes we do see some noise that kind of comes through the reported numbers, but the fact that current account actually has sequentially grown 5% has also been one of the contributors from a net interest margin standpoint as well. So I just thought I'll clarify that.
This is very helpful. The average CASA growth of 5% is, I think I missed that commentary. So this is very helpful. I think that puts my concerns to rest. Thank you guys, and all the best.
Thank you. Our next question comes from the line of Sukrit D. Patil from Eyesight Fintrade Private Limited. Please go ahead.
Good afternoon to the team. I have two questions. My first question is, as the bank moves beyond stabilization, how do you see Yes Bank positioning itself for growth in the retail and SME lending, while also expanding digital banking? could you share your vision on how the bank will differentiate itself in the next few years against larger private sector peers? That's my first question. I'll ask my second question after this. Thank you.
Why don't you complete your questions? We'll respond to both.
Okay. Yeah. My second question is regards to profitability and margins. Again, with profitability improving, how are you thinking about balancing cost discipline with the investment needs for tech and branch expansion over the next few years, and what steps are you taking to ensure the margins remain stable while the bank scales itself and the SME business? Thank you.
So I think first responding to your second question, in terms of investment for future and also at the same time maintaining a balance between the profitability. So I think if you see last 4-5 years, we have heavily invested in both technology and our retail network expansion. And despite this, we have been able to control our cost to asset. If you see our cost to asset, despite these kind of investment, has not gone up. Actually, we have been able to control within 2.5 to 2.6%. Okay. And if you see even the current growth on the OPEX is one of the lowest in the industry. And despite continue to invest in terms of opening new branches, better digital capabilities. So I think we have been able to reach that inflection point where whatever we have invested in the future, it has started giving the results to us. So it's a cycle where we will continue to invest for the future, and we also get the reward for our investment of the past. So I think we are quite confident that we would be able to invest also, and we would be able to have a balance between the cost as well as on the profitability side. Okay. Coming to your first question in terms of how we need to differentiate in terms of our SME and the digital side, I think if we see on the SME, we are showing one of the best loan growth. And even if you see our total advances, 29.3% of our advances are actually the SME advances, which is again one of the highest in the industry. So I think this is one area on the SME which offers a huge opportunity in our country, and we have a very good understanding and the distribution network in terms of acquiring new customers, having a good turnaround time and meet their requirements, not only from the loan purpose, but also in terms of solutions coming from the digital and the tech side. So I think this is one area where we would like to continue to outpace the industry. On the retail side, I think currently our strategy is definitely in terms of chasing a profitable growth, and we would not like to grow in those asset classes where the returns are not as per the risk. But definitely we are looking for some products on the retail where we are currently not there in terms of building our capabilities and start growing on this. I can name just two things. Maybe one I am not saying on the loan side, but definitely on the wealth side is one area where we would like to explore and build our the strength in this side. Plus, we may also look in terms of if the products like gold loan offer a good opportunity, how we can start building our capabilities for that product also.
I think the last part of the guidance was very important, and I wish the entire team best of luck for the next quarter. Thank you.
Thank you so much.
Thank you. The next question is from the line of Jay Mundra from ICICI Securities. Please go ahead.
Yeah, hi, sir. Congratulations on a steady quarter, sir. So I have two questions. One is, you specified the impact of gratuity under the new labor code, but the number seems relatively very high if you compare other banks, those who have given the preliminary assessment. Any reason, sir? I mean, other banks are saying only, very maybe 1/4, 1/6 number of what you have reported. So any more details if you could share there? Hello?
Ladies and gentlemen, the line for the management seems to have disconnected. Please stay with us while we reconnect with the management. Ladies and gentlemen, we thank you for your patience. We have now reconnected with the management.
Jay, you are able to hear me? Hello?
Sir, hello. Yeah, I can hear you now, sir.
Okay. I think we were disconnected in between. So, Jay, in terms of our understanding of the wage bill, is talking about that you need to calculate gratuity, assuming that your wages have to be at least 50% of your fixed pay. Okay?
Correct.
As per our wages construction, currently the basic pay is around 30% of the total fixed pay. Okay? So if we have to define as per the new wage bill, then the gratuity has to be worked on the basis of if the basic becomes almost 50% of that. Okay?
Sure.
Now, if we take it from 30% to 50%, and this is how we have worked our liabilities, and we have been very, I would be saying careful in terms of why not to make provisions. Instead of the coming quarters, we continue to have a negative impact. So basically, the strategy was more in terms of work out as per our understanding, make a one-time provision, so that the future earnings are not being impacted from any possible interpretation of the wage bill.
Right. Sure. Thank you, sir. And the second question, sir, on SMBC, right now they are the largest shareholder, but not promoter, and they also have through their 4 Indian branch. Right. So, do you see a possibility wherein 4 Indian branch of SMBC is amalgamated or, converted into wholly owned subsidiary, or how does it work? Can they run parallelly, or you think there is going to be an impending change there, or how should one look at that?
Yeah, my understanding is almost similar to what understanding you would be having on this. Nothing different. Okay, they are currently like a 24.99%. We have also seen a new item that got approval for a wholly owned subsidiary. How things will shape up in the future, I think all of us together we will see that.
Sure. No, sir, I'm not asking you to sort of give me any future thing. I wanted to check. They can, those 4 branches can they run separately, or they have to be sort of mixed with Yes Bank current operation as of now? Nothing into future. They can run separately, or they have to be.
Because this is the first time this is happening in the Indian banking space, very difficult to give a definite answer in terms of having a complete understanding how the regulator would think about it. So I think at this point of time, let's see how the whole thing would take shape in future.
Sure. And sir, on asset quality, right? So this quarter we have done exceedingly well. The SR redemption continues, and the specific provisions are negligible. Right? But sir, if I look at last quarter, right? So somehow it is creating a bit more volatility in the specific provisions. If you look at last quarter, there was a bump up, and this quarter, there has been significant decline. So, fair to say that if you continue to receive, let's say, 500 crores kind of a SR redemption, you can sustain the current negligible kind of a credit cost, or that can again have a volatility in this line item.
So, Jai, if you look at I think the right metric to look, Jai, is really the NPA provisioning, because as you rightly said, SR provisioning can at times be unpredictable. It is not a function of what we are doing. It's a reflection of what the asset reconstruction company is doing, although we keep getting cash flows from them. So I think just on the NPA provisioning, the credit cost, in March we did see provisions of about 900 crores. They kind of came for the next 2 quarters at about 680 odd crores, which is now come down to about 533 crores, right? And it's also clearly coinciding with the way our core asset quality performance has improved. So slippages have also come down. Now on the security receipts, look, we did see a dip last quarter. We did see some increase. Now I think that's the way some of these things will play out. But on the whole, we've always said that we had guided last year that our net credit cost, non-tax provisions to assets, should be below 50 basis points for the full year. I think we're happy to state that. I think that's something we should be able to continue regardless of the volatility that will happen during different quarters.
Right. Sure. And if you have any rough cut range of this redemption over the next, let's say, 2 to 4 quarters from this SR portfolio?
No, I think there would be difficult to say, but I think today if you see that out of 6,800 crores of security receipt, now we are left with only 1,800 crores.
Okay.
5,000 crores have been fully resolved, and in addition to 5,000 crores, we have also received a upside of almost 2,500 crores. Yes. So I think if we see that part, definitely for the remaining books, things would become more difficult and it would take more time. But I think we have given a guidance for this year in terms of having a recoveries of 1,200 crores for the entire year. We have already achieved 1,11 crores. Okay. So I think, fortunately, like our estimations on this part has been proved correct. But I think next year onwards also we would be seeing maybe recoveries in the range of 800 kind of things.
Right. Understood. And Niranjan, if you have the number in rupees crore for PL and credit card slippages, because I see that there has been a lot of improvement in the retail slippages. I mean, just that number in absolute crore will be very, very helpful.
If you can bear with me for 30 seconds, we will have that number. So PL, you're saying the gross slippage number is about 180 crores, and credit cards would be about 140 crores.
Okay. And they are clearly down, right? So if you have the corresponding number last quarter.
Yeah. So last year this number was about, same time was about 250 crores. Credit cards was about 190, 200 crores. So, we've kind of continued to see improvements from those numbers.
Yeah. Jay, just to add, Rajan here, just to add to this, one is the gross slippage number. The other one also is to look at the entry rates, right? Okay. So entry rates in cards from 20% is down to around 12%. Right, which gives a significant confidence on the way things are spanning out. Similarly, for retail assets, I don't have here for only PL, but overall for retail assets, it is down to 8.7% as compared to a high of around 10.7% a couple of quarters away. Right. So both in terms of entry rates, resolution, and slippage and recovery. Each of the product, including cards, is showing a significant improvement.
Sure. And sorry, I did not catch this. Did you say NT rate or, sorry, what is that? It's like entry. So entry into delinquency.
Yeah, the check bouncing rate.
Right.
Entry into the exposure. Yeah.
Sure. Okay. Thank you very much and all the very best.
Thank you.
Thank you. Ladies and gentlemen, you are requested to please restrict yourselves to one question per participant. If you have any further questions, you may rejoin the queue. Participants who wish to ask questions may press star and 1. Our next question comes from the line of Dev Dey from Horsepower Securities. Please go ahead.
Good afternoon, gentlemen. Can you hear my voice?
Dev, sorry, there's a disturbance on your line.
Can you hear my voice? Hello?
We can hear you, sir, but there's a disturbance on your line.
Yes. Okay. Good afternoon, management team.
Yeah, good afternoon.
Yes. Congratulations on splendid set of numbers again. My question is regarding the advance growth. Okay. So, are you confident to achieve with the advance growth in the figure of high teen or mid teen?
No, I think we are not aspiring for that kind of loan growth. Okay. We are more in terms of a profitable loan growth. We don't want to simply grow for a top line purpose, okay, without having a profitability. So I think mid-teen or high-teen is sometimes away, okay. Immediately what we are looking for the current financial year would be somewhere around 8%, and for next financial year we would like to be in line with the market.
And can you
sorry to interrupt, Dave. We request you to please rejoin the queue if you have any further questions.
Okay, sure.
Thank you.
No problem.
Our next question comes from the line of Nagesh Motamari, an individual investor. Please go ahead. Nagesh, your line has been unmuted. You may proceed with your question.
Yeah, good evening. Am I audible?
Yes, we are audible.
Yeah, I think congratulations for an excellent set of numbers in this competitive market conditions. I just have a small question. As a retail individual investor, when can we expect a nominal simple dividend from the bank in future?
So Nagesh, thank you so much. I think I recall you were also participating in the earlier earning calls. I think fundamentally if you see from where we started, we have been able to show quite a decent performance in very tough market. But definitely we would like to see that going forward, we will continue to perform much better and reward our investors.
Yes, any rough tentative timeline, 1 year, 2 years, or something like that? Because the equity is very high, servicing this kind of an equity is difficult, I understand.
Nagesh, at this point of time, I think it's very, very difficult. We need to discuss this part in terms of board and others. But I think at the right time, we will also come back.
Thank you very much and all the best, sir.
Thank you. Thank you so much.
Thank you. Our next question is from the line of Anurag Kuranov, an individual investor. Please go ahead.
Yes, hi. Can you hear me?
Yeah, Anurag, please go ahead.
Mr. Prashant Kumar, first of all, my appreciation. I hope my words don't sound bad, but you came in at a time and adopted an orphan and grew it to this level. So to you personally and to everybody else who turned around Yes Bank, that it could attract an investor like SMBC. And secondly, I am joining this for the first time, your conference, but I am a little difficult investor. I don't want to get satisfied with the dividend, but I have my own estimation of the stock price with this SMBC coming in. So when can you, and I know you have already said that you're looking for profitable growth on your loan book. So when can we see a doubling of your loan book so that my stock price can go up to 100?
No, but I think first of all, thank you so much for understanding and appreciating the performance of the bank. I think what we also need to be conscious of that ultimately what is the expectation. As per our understanding, the expectation from the investor is always in terms of profitable growth. Instead of maybe doubling the loan book where you don't earn and you come across the credit issues going forward. So I think for any bank, it's very, very important to diversify the loan portfolio, have some time in terms of understanding, doing it better, gradually grow, and this is exactly what we are doing. If you see continuously, every quarter has been better than the previous quarter. I think we would still like to be very, very calibrated, cautious, okay, would not like to do anything which can create any pain point for our investors. or the depositor. And we are quite, I would be saying, confident and feel happy that we are absolutely moving on the right track.
I don't want to even ask about SMBC because I think you've already indicated in your conference, and we will let the things unfold at their natural pace as per your own understanding internally what you have with them. But I think it's a beautiful chapter which we are waiting to unfold for it to unfold. And my best wishes to you and your team. And once again, you must be. I think I have a feeling that you're probably underappreciated at this point of time in the banking industry, as the task on your hand 5 years back was very, very difficult. So I'm trying to bring in this last point, although it may not matter to people who are listening to this. But I know how difficult it is to keep a team motivated and to bring them to a level of semblance. So best wishes for your group.
Thank you so much for your understanding and appreciation.
All the best, sir. And thanks for this opportunity for participation. Thank you.
Thank you. Ladies and gentlemen, we will take that as our last question for today. I would now like to hand the conference over to Mr. Prashant Kumar for closing comments. Over to you, sir.
Again, thank you so much for your continued interest in Yes Bank, attending the conference call and asking all the questions. I can only assure you that as a bank, we would continue to work for showing a better performance and to the benefit of all our depositors and the investors. Thank you so much and wish all of you and your families a very happy New Year.
Thank you. This brings the conference call to an end. On behalf of Yes Bank, we thank you all for joining us.